Tech Reimagined, redefining the relationship between people and technology. Brought to you by Endava. This is Tech Reimagined.
Hello and welcome back to Tech Reimagined. I'm Bradley Howard and I'm glad to welcome you to the latest episode of our show. We're now full steam into season 3, in which we explore how technology is influencing the fabric of our society, how we live, the way we work, and how we do business. Every Thursday, we're lucky enough to have the chance to sit for half an hour or so and learn from interesting personalities from the technology and business industry. And speaking of interesting personalities, we're glad to be able to introduce you today to David Wade. He's the space underwriter for the Atrium Space Insurance Consortium, or ASIC. Hi, David, and thanks for accepting our invitation. How are you today?
Yeah, I'm very well, thanks, Bradley. Yeah, really good to speak to you.
Can you explain a little bit about your background, please?
Yeah, so my background, like a lot of space underwriters, my background's in engineering, satellite engineering in particular. I studied aerospace engineering. I did a master's in astronautics and space engineering. I studied at the International Space University, and then worked for a couple of years in the space industry, taught satellite engineering for 6 years at Kingston University. And then for the last 23 years now, I've been in insurance, underwriting space risks.
Well, let's get cracking on some of those risks. Today's topic is going to be about new technologies in space insurance. So what type of technology-related risks do you normally insure against?
So the usual type of risk that we would insure against is mechanical breakdown or mechanical failure, mechanical wear out. You know, imagine, say, the bearings in a motor not having sufficient lubrication. That would be covered by an insurance policy if those bearings stopped working and you could not use that motor any longer. Or an electrical short circuit, say a component in a printed circuit board has a short circuit and knocks out part of your satellite. That would be covered. But we also cover things like micrometeorite strikes, cyber incidences. We basically cover anything that happens to the satellite. Space weather events, major outpourings of particles from the sun that charge up the satellite. Just about anything that you could think of is going to be covered.
And how do you begin to determine the premium for a space insurance policy?
We now have lots of data. I mean, in the early days, it was kind of, stick your finger in the air and guess which, guess what the correct rate was. But satellite insurance has been around for a long time now. I mean, the market really grew in the 1980s. So we have an awful lot of history, which has allowed us to develop our models. Different underwriters take different approaches. For us, we use a Bayesian analysis where we look at the historical record. So, for a particular launch vehicle or a particular satellite, how many in the past have failed? How many have had problems? Historical record is all very well and interesting, but when something goes wrong, you learn lessons. You have a very steep learning curve in the space world. If a launch vehicle fails, you learn a lot of lessons that are applied going forward. So for a new launch vehicle, it's very typical that we would see 2 of the first 10 fail. But after the 10th flight, you then usually get a very long string of successes because those lessons that are learned from those first 2 early failures go into the improving the reliability going forward. So with the Bayesian analysis, we look at the historical record, how many out of those launches that have already occurred have failed. But then we also try to use a crystal ball approach. You look at how many you think how many launches will take place before you see your next failure, trying to recognize those lessons learned. So you use a series of merit factors. Examples, maybe quality control, the manufacturer's experience, those kinds of things. You use a series of merit factors to try and come up with a figure of how many launches you think will take place before you see the next failure. And then you combine those 2 into a single figure. That gives you your technical rate going forward. The technical rate is only one aspect of it, of course. We have to make margin on top of that. So then it's a matter of negotiation with the broker and what the market competition will allow. to see how large you can make that margin.
At what stage of the process are you then asked for a quote? Is it the original thought about doing a launch for something, or is it quite last minute?
Yeah, all of those and more, I think. I mean, I can think of one example where we were approached 4 days before the launch and asked to provide insurance for a launch that was taking place 4 days later over a weekend. So that was a bit of a challenge, but that's unusual. Usually, I would say typically 18 months ahead of the launch taking place, we're approached. So it's quite a long process. For a new satellite, we'd typically be invited to a presentation by the satellite manufacturer or the satellite operator. They would go through all of the details. This is, as I say, typically 18 months ahead of launch. We would then, maybe even longer, we would then have a period when we can raise questions, get those answers, review those answers, ask further questions if necessary. And in parallel to that, the broker will be working with the client on the wording. All of our wordings are bespoke. So the broker will be working with the satellite operator to look at those loss definitions, and then we'll come out to the market and usually test those loss definitions with a handful of underwriters in the first instance and start the placement process. But all of that is typically completed, well, certainly 12 months to 18 months ahead of the launch. Typically, at the time that we're doing it, it is maybe 12 months ahead of launch, but we see so many delays that by the time it happens, it's 18 to 24 months between writing the policy and the launch actually taking place. In orbit risks, it's all compressed. In orbit risks, we get a health report. So we're renewing a satellite that's in orbit. We're renewing it 1 year at a time for the 15-year lifetime of the satellite, typically 15-year lifetime of the satellite. And for those, we'll get a health report maybe a month before the policy expires. We'll review that health, have a chance to raise any questions, get those questions answered. And then, the whole process is compressed into about a month or so before the renewal takes place.
With so few underwriters around the world and so few brokers, I'm assuming there isn't much churn within the industry. I wouldn't have thought there's a satellite is covered for 10 years by one underwriter and then it moves, or does it?
It does tend to move. It's the space market goes through cycles like every other sector of insurance. Yeah, and particularly in 2022, we've seen a cycle where there was quite a lot of launches. But people were a little bit hungry for income because some people used to write the Russian risks, were no longer able to. Some people did not get on the big launch placements that were placed. So losing that income from the Russian risks, for example, they were hungry for income. So then they started chasing every in-orbit placement that was coming up to try and make sure that they replaced that lost income. So you see that competition, drives down prices. Sometimes those prices go below the point at which you're comfortable. So there's a little bit of churn, but I would say most of the big operators they stick with their preferred markets. But as satellite values decrease, certainly as the lifetime goes on, a brand new satellite at launch might be $250, $400 million, and then most of the market would have to be on that risk. But towards the end of the life, a satellite that's maybe getting down to $50 million to $100 million, there's still sufficient capacity in the market to drive competition by the time you get down to $50 to $100 million. And that's seen rates reduce over the course of the last year for sure.
Wow. Do the satellite owners have like a no claims proof that you have for motor?
We, in some instances, yes, we do. The insurance is exactly the same as every other class of insurance, really. It's just the values that are involved are somewhat higher. In some cases, we use a no claims bonus. Those are usually instances where we have a slight difference of opinion on what the rate should be. Maybe an early flight of a launch vehicle or a particular satellite technology that we're not entirely comfortable with. Comfortable enough to quote it, but can't quite get to the price that the client is looking for. So that final negotiation sometimes comes down to a no claims bonus. Okay, well, pay our price up front, and if it goes clean, we'll refund the difference to you to get down to your price. That usually is then followed with a request from the broker to make it an additional premium, and they pay the lower premium up front and pay the extra if they have a claim. But that's all part of the negotiations that go on. Absolutely.
Wow. And back to new technologies, with a few new manned flights coming soon, there's landing on the moon again, and then hopefully Mars as well. How do you even begin to price those? Because you can't use your Bayesian principles for that, because the last man on the moon was so long ago that the technology, I assume, is completely out of date.
Yeah, absolutely. I'm not sure yet we'll be getting involved with the manned landings or the human landings on the moon. Certainly we're looking at some of the technology that will be delivering payloads to the moon, so instruments to the moon ahead of those human flights. So there's a new program that NASA has called CLIPS, Commercial Lunar Payload Service, where they're going to use commercial providers to deliver payloads to the surface of the moon. And some of those commercial providers will certainly be looking for insurance. And yeah, you're right, completely new concept. If we can, we would like to see demonstration flights before insurance gets involved. That's not always going to be possible. Some of those early missions will require insurance. And what happens in those situations is we look at the similarities to other satellites. So a lot of the technology that's being used will be similar to the satellites that are already in use. For example, it will probably not be a brand new rocket engine. That rocket engine has probably been used sometimes on satellites previously. It will probably not be new guidance systems. The guidance system will probably be used on previous satellites. So we'll be digging through each individual system of the satellite to see where that technology is being used before, and looking at how it differs from what has been done before. And that will start to form the basis of some rating. That said, it will still, that first mission landing on the moon will still be a brand new activity. And in most of those instances, if we're prepared to write it, we would write a much smaller line than usual. So typically I'm writing $20 million on an individual satellite. If there's an activity that I'm prepared to cover, probably at a significantly higher rate, I would reduce my exposure significantly on those early flights. Most people would take the same position, and that drives down the competition, forces the price up. But on those early flights, we certainly don't want to be overly exposed to new technology. It's a criticism that's often leveled at insurers, that we're not prepared to insure the early flights. But I think where we see the need, where we see how important something is, it is an aspect that insurers are prepared to get behind. I can think of an example a couple of years ago where a spacecraft called ELSA-D, which was to capture a piece of debris and remove it from orbit to demonstrate what's called active debris removal. That was a commercial venture, came to the insurance market. Insurers recognized the importance of what that company was trying to achieve. And despite it being the first attempt at active debris removal, there was enough insurers who were prepared to write a small line to get that insurance policy covered and get it in place for the client, to allow them to go ahead and do that mission. Insurers will step up to the plate, but it takes quite a while. We need to get to know the client. We need to get to know the technology. We want to come along on that journey with the satellite operator. We don't want to be approached a month before launch. We want to be working with them for, I think in that case, 3 to 5 years beforehand to really understand what they were trying to achieve, how they were developing the technology, how they were getting through those milestones, and really proving that technology was going to work.
So I'm not asking for anything confidential on this public podcast, but are you and the other underwriters in the space industry already looking at some of the really new technologies that are being used or designed for Mars?
Not yet. Mars is a little bit too far into the future for commercial operation. Well, for insurance sector at the moment, and most of the Mars activity will start off with government missions. Those will be European Space Agency, NASA, those kind of activities to begin with. So very unlikely to be insured at that stage. We have in the past seen. The market has been approached to insure a spacecraft going to Mars in the past. That was probably a little bit too difficult for the market to accept at that time. It was a particularly new vehicle going to Mars. But then we have to look at what we can cover. So in that particular instance, if I recall, we offered coverage for the launch flight of the launch vehicle. So we covered the satellite until the point that it separated from the rocket. So had the rocket not delivered the satellite to the correct trajectory, it would have been a valid claim. Had the rocket blown up during that launch phase, it would have been a valid claim. But once the satellite separated from the rocket, then they were on their own. So we have considered those kinds of things in the past, but with limited cover, let's say.
Are there any space-related activities that are not usually covered under policies? Asteroids, war, solar flares? How about aliens? Do you ever talk about aliens in any of your policies?
No, we don't have aliens. That's
a sweeping statement for the UK.
Yeah, we don't have specific exclusion for aliens. We do cover most things. Mechanical wear out, electrical breakdown, space weather. If you get a big event from the sun, that can lead to one part of the spacecraft charging at a different rate to the other part or to another part of the spacecraft. So you might get an arc form between the two and get localized heating, which damages the satellite. So we do cover those kinds of things. Our typical exclusions are things like war, insurrection, strike, and riots that might affect the ground station where the satellite is being controlled from. So those would be the typical type of exclusions. We do have an exclusion for anti-satellite weapons, which is probably quite a unique one in terms of insurance. We do, I think, also sort of quite a standard exclusion in most insurance policies would be willful or intentional acts of the named insured, taking some action against the object that is insured. But we do have one exception from that, which is the range safety officer. If the rocket starts to go off course, there is somebody sitting with their finger on a button that can detonate the rocket. So we do have an exception for that one person who can detonate the rocket if it starts to wander off course. Cyber was silent. We've had to introduce some language for cyber coverage in the past few years. It was something that was silent. So now cyber attacks are excluded, but cyber incidents, non-malicious incidents are continue to be covered. But no aliens, I'm afraid.
Right. Okay. There you go. There's an opportunity for a new line there. So, has artificial intelligence started impacting space vehicles yet? Thinking route guidance or anything like that?
Yeah, we haven't really seen it used yet. I think, again, small numbers to date. Lots of data analysis goes on in the background in terms of writing those software algorithms and things, but we haven't seen widespread use of artificial intelligence yet. I know some insurers are starting to look at what benefits can be brought in terms of using artificial intelligence to look at data sets. But it's such a small data set. Only 300 of the 6,000 active satellites are insured. So, and they come from a wide range of manufacturers from different countries. Some information is restricted, export restricted. Some information is just considered too commercially sensitive to be provided. So, data is always an issue. And I always worry about sort of using a limited data set. Are we really getting the information that we need? There are some great data sources out there. There are companies that provide data on satellite anomalies. There's companies that provide data on space debris monitoring. It's monitoring space debris and giving alerts as to when space debris might be coming your way. There's companies that are trying to offer services looking at debris and trying to offer services that might be useful to insurers. How many objects are in a particular orbit, for example, so that you can use that as part of your rating assessment. I wouldn't say it's come into the rating significantly yet. By far, the biggest factors that we have to deal with are mechanical wear out and electrical failure, much more than debris or space weather events at this stage.
And none of the vehicle manufacturers are looking at AI for autonomous vehicles. Is that such a thing for their navigation?
I mean, certainly there's some of the satellite operators are looking at autonomous collision avoidance. So the constellations, these large constellations of satellites like Starlink, where you're launching 3,000 satellites to a very similar orbit, there will be times of conjunction when two satellites are coming together. There'll also be times when debris happens to cross that orbit, or another satellite wanders through that orbit. So there are periods where you need to take evasive action. You need to fire a thruster to maneuver your satellite out of the way of a potential piece of debris. And there are companies that are looking at sort of autonomous collision avoidance maneuvers. I think SpaceX has had some success with that to date. There's still a lot of inaccuracies around how close, a lot of inaccuracy about the orbits of a particular piece of debris. Significant amount of inaccuracy in terms of altitude and exact position of that piece of debris. So, operators are still taking a call. They might get a warning to say this piece of debris is coming their way, but they're still taking a call as to whether or not it's worth maneuvering the satellite, because the inaccuracy in that data is so large. I think in terms of using onboard sensors to detect that debris, and manoeuvring accordingly, I think we're in the very early days of that. Certainly companies are looking at it, not really convinced that anybody's achieved that kind of use just yet. Why
is the debris field so inaccurate?
You're measuring that location of debris using ground-based radars. So you're using a radar signal, various radars dotted around the Earth, sensing those objects. So I think just from the distances involved and the timescales involved getting that radar information, there is a level of inaccuracy there. These objects are moving at quite a speed. They are not continuously tracked. They're picked up by a radar, say, in the southern hemisphere, and then maybe 2 or 3 other hits during the course of a 90-minute orbit. So they're not continuously tracked. They're constantly trying to sort of match the object to the data. So I think there's a lack of accuracy in that process, but also there's an awful lot of objects up there that can't be tracked. We can only really track things that are larger than a tennis ball. So there's about 30,000 pieces that are being tracked, but there's millions of pieces smaller than that which can't be tracked, which cause an issue. And every piece in low Earth orbit, no matter how small it is traveling at 7 kilometers a second. So even a tiny particle, a dust particle, still carries a lot of kinetic energy should it hit something. There are certainly companies looking at improving the accuracy. So a company called Leo Labs is setting up new radars, higher frequency radars that will improve that accuracy. But with the technology that's currently in place, it's quite large inaccuracies associated with tracking the debris.
Right. Well, thank you, David, once again for such an interesting conversation about such an interesting topic. If anyone wants to get hold of you, David, what's the best way they can do that? Are you on any social media?
I'm on LinkedIn, have a look at the Atrium underwriting webpage or the Atrium Space Insurance Consortium webpage, and my email address is on there.
Excellent, thank you. To all of our listeners, if you found this episode insightful, please spread the love and share it with your network, or just follow us on any of the major podcast platforms. We're always interested in your feedback, so please either go to endava.com and click on the contact button, or you can contact us at Endava on any of the major social platforms.